What's really causing this crypto dump? Let's get into the brutal truth. The last 24 hours have been absolutely wild in the crypto world. Everything we could have hoped for seemed to line up perfectly. A positive Federal Reserve meeting, a 25 basis point rate cut, and confirmation that quantitative tightening is finally ending. On top of that, we had what looked like a great meeting between Donald Trump and Xi Jinping. Plus, major companies across the S&P 500 beating earnings expectations. So, if everything looks that good, why is Bitcoin crashing and altcoins bleeding red across the board? Something doesn't add up, and that's exactly what we're going to break down today. Before we dive deep, make sure you hit that subscribe button right now. It really helps the channel grow and keeps you ahead of the biggest market moves before anyone else. Now here's the frustrating part. Every time a risk shows up in crypto, the market drops. And when that same risk disappears, the market still doesn't bounce. It's one of the most confusing and painful patterns investors have faced all year. But there's a reason behind it, and once you understand it, you'll stop getting shaken out by the noise. So let's unpack what's really happening under the hood. At first glance, the Fed meeting looked like everything bulls could want. Rate cuts are here, QT is ending, and more liquidity should mean higher prices. Yet, the reaction was the opposite. Why? Because Powell admitted the one thing every investor fears: stagflation. Inflation risks are rising, while unemployment is starting to creep up. That means the Fed is trapped. If they print more, inflation spikes. If they tighten, the economy slows further. And that's exactly the kind of uncertainty that kills risk assets like crypto. Powell's other comments didn't help either. When he hinted that a December rate cut was not a foregone conclusion, traders panicked. The market had already priced in that cut, and suddenly, it wasn't guaranteed anymore. Overnight sentiment flipped from optimism to fear. Add to that the ongoing government shutdown drama, which threatens to delay economic data and stall future rate decisions. And you've got a recipe for chaos. Meanwhile, that high-profile Trump-Xi meeting everyone was celebrating turned out to be more symbolic than impactful. Sure, both leaders talked peace, trade cooperation, and mutual respect. Xi even promised to resume U.S. soybean and rare earth imports, and Trump rated the meeting a 12 out of 10. But markets don't trade on speeches. They trade on confidence, and investors aren't buying it. Beneath the smiles, tension remains over technology restrictions and geopolitical trust. Now, new data has emerged that lifts the lid further. 1. The crypto sector isn't just down because of macro rates or geopolitics. It's caught in a massive leveraged liquidation event. Over $19 billion in long positions were wiped out in just 36 hours. The scale of leverage in crypto means a small shock can cascade into a major decline. 2. Trade war fears with China aren't gone. They just took a different shape. Trump's surprise tariff threat on Chinese tech exports triggered the initial panic. 3. Institutional flows and ETF exits matter more than ever. Despite the rallying headlines, institutional investors are cautious, and liquidity is thinning, which amplifies volatility when a shock hits. 4. Global financial stability warnings from bodies like the International Monetary Fund, IMF, are flashing red flags. They highlighted the risk of a disorderly correction due to overvalued assets, trade tensions, and weak non-bank financial structures. So what's the real reason crypto is dumping even when the headlines look bullish? Simple. The market isn't reacting to news anymore. It's reacting to exhaustion. We're in the final phase of a long correction. This is the stage where good news stops helping, charts look hopeless, and sentiment hits rock bottom. It's the shakeout before the next leg up. Every bull cycle goes through it. 2017, 2021, and now again. The purpose is to convince everyone that the bull market is dead just before it rips to new highs. Look at the data. BTC has touched its lowest levels in months. Ethereum and Solana are bleeding, and traders are losing faith. But this is exactly how bottoms form. Slow, painful, and filled with disbelief. The fundamentals haven't changed. The halving cycle still stands. Liquidity will return, and institutions are quietly accumulating while retail panic sells. The truth is, markets move first and justify it later. When prices go up, the media finds bullish explanations. When they go down, they find bearish ones. None of that changes the bigger picture. Crypto is simply resetting before the next expansion. Bottoming isn't a moment, it's a process, and that process is happening right now. So if you're wondering what's really behind this crypto dump, it's not the Fed, not Trump, not Xi. It's fear, exhaustion, and manipulation doing what they always do. Shake out weak hands before the real rally begins. Hold strong, stay informed, and don't let the noise fool you. The next move up will belong to those who didn't flinch when everything looked darkest. If you found value in this breakdown, don't forget to subscribe and stay tuned, because in the next episode, we'll uncover what the data is signaling for Bitcoin's next 7-day move and whether this correction is finally over. Stay sharp, and I'll see you in the next one.